but the math ain't mathin' because my payment is $5,700 a month.
If my mortgage was ever $5,700 a month, I don't even want the house no more. I want a do-over. I need Jesus himself to come down and say, my child, your loan is forgiven.
So my husband and I refinanced our mortgage today because interest rates dropped, and it was enough to save us $300 a month.
All right, first, we need to go over some terms. According to bankrate.com, refinancing is a strategy lenders and borrowers use to replace an existing mortgage with a new one. And this is also very important. To refinance a mortgage, you'll pay between 2 and 6% of the loan amount in closing costs. Going on to say this very key piece right here. So if you are refinancing to save money, you'll need to calculate your break-even point.
So my husband and I refinanced our mortgage today because interest rates dropped, and it was enough to save us $300 a month. However, I have in my hands the amortization schedule, which is how long it's going to take us to pay off said mortgage and how much would go towards principal and interest each month. And I want to use this to talk to you about why home buying in America is an absolute scam and why this will be the last house we ever buy in this country. So just really quick facts. It's a standard 30-year mortgage. It's a VA loan, so I didn't have to put anything down in order to refinance, and I don't have to pay any mortgage insurance, which is what normal people have to pay when they don't put 20% down. But because we didn't put anything down, I went from owing $784,000 on my home back up to $795,000.
Look, first of all, where you stay at, is it California? Because why am I looking at penitentiary numbers for your house on the screen? Now, she just said she was able to save $300 a month because she refinanced her home loan. But I need to point something out to y'all. Remember, I just gave y'all the definition of what exactly that means when you refinance your home loan mortgage? To some people, it's like, hey, she's saving $300. That sounds great, right? But you're restarting the financial clock on the mortgage. And that's just in general. So it depends on whether this is really a good call for you long term, if that makes sense or not. And as they said on bankrate.com, you need to calculate that yourself. Otherwise, it could be a bad choice. And what's also very interesting is she said she went from owing around $784,000 on her home to owing around $795,000 on her home. She owed less previously as far as her principal is concerned for her house. But because she's paying $300 less a month, it seems like she feels like this is a good decision. And we talk about here on this channel how interest rates being high makes your monthly payments higher. And she said she refinanced, so she refinanced for a lower rate, which means a lower monthly payment. However, she owes more. So it's kind of like if you were to borrow money to save money, or like using your credit card to become debt-free. You see what I'm saying? It's like, we still got some issues here. And trust me, the bank loves when this happened. They somewhere clapping their hands, but her balance went up.
But my original interest rate on this house was 6.2%, and now it is 5.6%. We are planning on selling this house when my husband retires in 4 years and exiting the U.S. So, of course, I was interested to see what will I owe at that time in 2030.
Okay, she just refinanced the house for $300 less a month, which is, that probably works better for her. I understand that. But refinancing a house that you're not staying in, that's an interesting choice. And the reason I'm saying that is because your interest is generally front-loaded whenever you're paying a mortgage. Just think about it like even when you pay a car. A lot of y'all pay your car notes and you're like, oh, I paid on this car for a whole year. I'm not seeing a dent in how much I owe on the car. It's because of the interest, right? You're not paying towards the principal of the car as much as you think you are, right? So when you look at the principal amount that you still owe, you haven't really made a dent. Now imagine doing that with $700,000. Don't imagine. That's what she did. That's what I'm talking about. She did it. So if you think with a $30,000 car, you ain't make a dent in the first year or 2 or 3, she's really not going to be making a dent because the way the structure of the mortgage loans work is it's front-loaded interest on the home loan. So she's planning to close up shop within the interest-bearing years, those beginning years of her being in the home loan, meaning she's not going to be making a lot of payments towards the principal, aka you're not really making a difference in the balance you owe for the house. Just think about it like this. You wouldn't go get a year-long gym membership to only work out during 2 months of the summer, would you? Why? Because you paid for it. You paid for the whole year.
And at that point in 2030, we will owe just under $750,000. So I will only have paid off $50,000 worth of my mortgage in the next 4 years. But the math ain't mathin' because my payment is $5,700 a month.
And that's why we were talking about it. This is how the mortgages are designed. It's like eating at the crust of a pie. Well, you still got the whole rest of the pie. That interest is the crust those first couple of years. You have not started eating the rest of the good filling in the pie yet until after those first couple of years, because again, it's front loaded.
$5,700 a month times 50 payments is $285,000. And if you look at the schedule, it tells you, oh yeah, you're financing $795,000. But if you kept this interest rate over 30 years, you're actually going to end up paying $1.6 million.
That number might sound very alarming for some of y'all, but I'm glad she actually pointed this out because that is the reality of stretching out the mortgage payments over 30 years. So let's just use her house as an example. Her principal she owes was like $780,000, right? But a lot of y'all don't think about what the interest will be if you spread it over the term, which is how many years that loan is going to be in effect for, and you don't incorporate the interest rate that you got it for. After all of that math and her paying the interest on that loan, she would end up paying $1.6 million. And that's what I need people to understand when we're talking about interest and loans and things of that sort. It's not just whatever amount you bought something for that you end up paying for the long course of time. You have to factor in the interest rates and how long you're going to be paying for that loan. And she was wise to pull up her amortization schedule. A lot of people don't do that. They're just like, oh, I can make the monthly payment. But over the long term, yeah, this is accurate. This is what she's going to end up paying with the interest. And if that's a scary number for you, just think about it on a smaller scale. The same thing happens with your car, which is why credit plays a huge role in all this. When you have bad credit, you get an even worse interest rate than most people would get. That's why a lot of people like to try to pay off their house early, because think about it. Would you rather pay $784,000 or would you rather pay $1.6 million over the course of 30 years? I can't answer that question for people. Some people rather pay off their loans early. Some people wouldn't because they say, hey, I can put the money in the market, in the stock market. I can get a better return elsewhere. And they just don't care about paying off the bank for a house. But you also got to think about the other side of it, which is you're giving the bank way more money for that house than it's actually worth if you don't pay it off fast. So I'm not sure that I would say this is a scam, even though it might not seem fair to a lot of people, but this is the cost of renting money from the bank for decades at a time, y'all. Remember, 3 decades, 30 years is what you were given for this loan because you don't have this money up front. And rightfully so, girl, because this is a lot for a house. For $784,000, does it come with a house cleaner? Does it come with a personal chef? Because what?
But the biggest scam of all is how much interest they charge you the first year you own the house. And I have other videos on this. I've talked about it. Again, I put myself in this situation. It is what it is. The point is I'm calling out the banks because they are ridiculous. First of all, when you come to closing, we bought $7,000 to closing. They make you pay $3,500 in upfront interest. So not only are your first 12 payments horrendously just put towards interest, but then you have to bring extra money to closing just to pay interest up front.
And I feel like it's scammy for other reasons because she got into this home knowing that she's planning to leave within the next 4 years. It's just like saying to the bank, here's $3,500 for the upfront interest. Here you go. I'm not going to be here long anyway. Take my money. It would make more sense if she was staying and planning to pay the house off, but she's not.
I will say this. Our principal and interest amount is $4,500, and it's our taxes that are additional $1,000, which is how we get to that $5,700 number. Our first payment is $11,100 coming up, right? $4,500 payment. Only $849 of that goes to principal. And every month after that, only $4 extra of your payments goes towards principal. Mm-hmm. My very first payment, $4,500 payment, $3,700 of that goes to interest. So even though over the next 12 months, I'm going to make roughly $54,000 in principal and interest payments, not including taxes, according to the amortization schedule, I won't even have paid down the mortgage a total of $10,000.
It just sounds like real life so much. It's like if you were trying to be healthy and maybe you're trying to change your lifestyle, right? It's like going on a diet and then the first 2 weeks you just gave up and then you're like, oh my gosh, I put in this work for 2 weeks, which is like an analogy for the 4 years compared to the 30 years that she's supposed to be paying off this loan, right? But she's not going to do that. Oh my gosh, I didn't see any results. Oh my gosh, it didn't make a dent. It's like, yes. And it's like, Yes, because everything is front loaded in your mortgage loan. It's not going towards your principal. And what's crazy is she's looking at it and she knows that. It's on the paper. It's showing you within these same first 4 years that she's planning to leave in, she's not making a dent. And remember earlier, I said that you got to do your calculations to see, are you going to break even? I'm not understanding what math. What math made this seem like a good decision? You see what I'm saying? It just doesn't add up. Like, to me.
And not for nothing. Again, remember, I was down to about $784,000 before I decided to refinance to save money. But 12 months from now, I'm going to owe the exact same amount of money on this house as I did yesterday before I refinanced.
Yeah, it's kind of like you are still on a hamster wheel spinning. You didn't really go anywhere. You haven't touched the ground. You didn't go back or forward, but you're paying less a month, like, I guess. But you did reset the clock.
And so that just goes to say that refinancing is also a scam.
Comment down below for all my homeowners. Do y'all think that refinancing is a scam? Now, I know a lot of people like to do it, especially to get lower interest rates. I think it could be used as a tool if you do it the right way and it makes sense. And I'm not sure if the bank knows she's planning to sell her house that she just refinanced on in 4 years. Even if they did, why would they care? Because honestly, they're going to come up in the situation regardless. What I feel this is really about was just her getting lower monthly payments, and that was about all she cared about. But if she's going to be selling the house, I think she's going to have another set of problems here in the future.
Because you claim that you're saving me money, but in the end, you're always going to get your money back. And while I get to cash out my escrow account from my previous mortgage and I don't have to pay my mortgage in all of October and you're handing me $14,000, you're literally just framing it like you're paying me in girl math. But in reality, I'm spending way more money with the bank. And because we want to sell the home in 4 years, it literally doesn't make sense for us to refinance again, because even if we did with an even lower interest rate, we wouldn't be able to recoup that because most of that first years of payments would go directly to interest.
And just like she's not probably going to be able to recoup this because she's selling in 4 years. It's like she knows already, but I don't know why she did it anyway. I don't know. Had to be because she said, hey, $300 less a month, I'm going to take it.
So the only thing that we can hope for now is that when we get our mortgage down $50,000 down to $747, and hope that we can sell our home for maybe $850, maybe, and hope we can. That doesn't even include realtor fees and things like that. Maybe we'll be able to sell our home and leave the U.S. with $50,000 in our pocket. It is not worth it. Home buying in this country is an absolute scam. And I hate that the only other options are rent from someone who's paying a mortgage to the same bank or be homeless.
I don't know if it's just me, but am I the only one thinking she could have just put the house on the market right now, saved the money for the next 4 years, and then left the country? Instead, she refinanced it and is going to hold it for another 4 years. I'm thinking she's hoping the equity in the house is going to go up, which will allow her to sell it for that $850,000 that she's trying to get later. But the only thing about that is there are no guarantees in the housing market. You don't know if the interest rates are going to be higher than they are today, to where nobody might not be able to buy your house. I mean, just look around. A lot of people aren't buying homes because of the interest rates. They're currently too high for a lot of people. And then on top of that, home prices in general are just out of a lot of people's reach. So it could be a real gamble, hoping and praying that the housing market is going to be better then. But hopefully it is. Even after selling her home for around, if she was to get $850,000 and she walked away with the $50,000 profit, that might not sound like a bad exit plan for a lot of y'all who are like, yeah, that's enough to leave the country and to do something with. But let me just compare. If she wasn't to do that, though she might be able to save money if she rents, there's also a little bit of nuance to that. It depends on where she lives, if it's actually better for her to stay in the house that... This house seemed expensive, girl. I ain't gonna lie, because she said it was $784,000 or something like that. Could it have been done cheaper renting somewhere? I don't know. Because she still has to live somewhere, right? She still would have to pay rent if she didn't pay her mortgage to the bank. And trust me, I understand everybody's got to live somewhere. But do you want to pay for a roof over your head or for the bank's yachts? In this next video, she is replying to a comment that says, $5,700 a month. Girl, what do y'all do for a living? And this is a good question. And I also think she gotta stay in California, but put your guesses down below. What state do y'all think she lives in? Because this is high.
Every day, I am reminded how much money I make and how I really help other people make a ton of money. Yes, our mortgage is $5,700 a month. And yes, it's not that difficult for us to pay it.
That's good. That is a blessing. I'm glad she don't have to struggle to pay her rent. Her mortgage. And she just said that she had 3 children, which I didn't want to show them in this video.
No, we are not billionaires. We are a regular family in Southern California.
I called it Cali because them prices wasn't making sense. I was like, California is so high. I don't know how a lot of y'all do it.
We have a very, very nice pool.
Oh, this is
My
nice.
husband is in the military. I counsel 6- and 7-figure earners on how to be industry leaders.
So, wait. Her husband's in the military. She counsels people how to be a leader. High earners, she said. Interesting.
I also teach people how to unlearn beliefs that capitalism and patriarchy have taught them. And one of them is that you have to work hard to make a lot of money, and you don't. Earning $15,000, $20,000 a month does not have to be difficult. But every single day when I get comments like this, I'm reminded just how much, especially as Americans, we are addicted to struggle. And we are addicted to the idea that we have to slave 80 hours a week just to make $50,000 a year. And honey, that is not it. I probably work maybe 20 hours a week in my business. All of my clients are voice note based, so I rarely have to sit down and actually do calls. I've set up a really good living for myself and for our kids until we leave the US, where the money that I make will stretch even further. And I have no qualms about it. I love teaching people how to make a ton of money. But that also doesn't mean that I'm fully versed in how refinancing works and how mortgaging works, because these systems are not designed to be understood. That's why the refinancing paperwork is at least 400 pages long. These banks bury you in information so that you get overwhelmed and you just sign not knowing what you're doing. And I learn as I go. I figure it out and then I share it with you guys so that you can make the same decisions or avoid the same mistakes. But yes, we make good money. I love making good money. I love teaching other people how to make good money. And if you are an entrepreneur and you're like, I want to make good money and I don't want to work 80 hours a week, baby, you come to me.
Wait, so you a financial coach, kind of? And I'm no expert either. But your girl know how to do a little math. And it's no shade, but is this one of those I tell people how to make money and then that actually is how I make money by telling you how to make money, but not actually doing the thing that makes us make money? It's just by telling you how to make money. I don't know. But it was given link in the bio and sign up for my coaching. I don't know. That's just what it was given a little bit. It just felt like a sales pitch. I know a sales pitch when I hear one. I'm like, what do you want? Dang. Now I gotta be real, y'all. I'm a little conflicted about that last clip because she refinanced her house to essentially save $300 a month, right? But if she was making so much money, tens of thousands of dollars in that, hey, she's coaching people. If you refinanced your home because you were trying to save around $300 a month, which I can understand everybody wants to save money monthly, right? But if you're really bringing in that sort of money every month, tens of thousands of dollars, why is $300 breaking anybody? The math really ain't math in here. It would be like Jeff Bezos pulling up in his Bentley or something at Wendy's, pulling out some coupons. Like, something don't smell right about this. You see what I'm saying? It don't make sense. Nonetheless, girl, you got an expensive house, but I hope that her sale goes good and that the housing market does actually go up and that her house appreciates in value so she can at least, leave with the $50,000 that she's trying to leave with to leave the country, start a new life. But I need to know what y'all think about this one down below. Do y'all think that it was wise for her to refinance her home with plans to leave the country or to move within 4 years? And how do you feel about refinancing homes? Are you against it? Do you think it's ever a good idea? Because you have to restart the clock, but we have to start making better decisions today in order to have a better future.